What's going on, Elegante FX members and followers? Thanks for hopping on real quick. I wanted to hop on and kind of give a quick lesson to everyone out there because as I continue my own journey when it comes to trading and excuse me, as I continue my own journey through trading and helping others learn trading and more kind of basing it on a long-term bias, right? Because I find it hugely important that longevity in the markets is so much more important than your immediate gratitude that so many new traders look for. You come in, you probably saw an ad of how you can make $1,500 a day with crazy leveraged amounts of money, doing some crazy London strategy or some day trading strategy. Now, yes, there are people that make thousands of dollars a day trading. But you don't see through the surface what they're really doing. They either have a decent amount of money in their account already, to where their risk is minimal, yet their return is still good. And those are the solid day traders, right? The ones that I can actually say that I respect. And then you have the ones that are day trading, but they're trading with huge amounts of leverage, like 1 to 3,000 leverage, 1 to 2,000 leverage, and they're banking on the idea that this trade is going to be so perfect that they're going to do it. It's basically called account flipping. And what I hate is that it continues to plague the minds of new rookies in the markets and people who are getting exposed to the markets and have a deep interest in learning how to trade. And how to last in the markets, and they get exposed to that kind of mindset right off the bat, and that's exactly what happened to me. I'm lucky that I got out of it because most don't, right? 90% don't. 95% don't get out of that mindset, and they eventually go on to blow many accounts. And that's not what I want to happen to you if you're watching this video. I'm talking about longevity in the markets, trading price, and reacting to price, not predicting. You don't fucking predict the markets, okay? There are chat rooms that I have seen where people are absolutely hugely egotistical, and they think that they have the ability to know where price is going to go, where it's going to stop, where it's going to reverse, where it's going to wherever, and you don't, okay? No trader does. All the well-known traders that have made hundreds of millions, even tens of millions, hundreds of millions, even some billions of dollars, they are all known for reacting to price and having very bare charts, right? They don't rely on a bunch of crazy indicators, and they don't use indicators they don't rely on indicators to make their decisions, right? They rely on price, because price is the best tell of what price is going to do, right? We can only be so confident in one move, right? So here's the problem, right? You immediately go into the market, or into your say your trading career, right? Your educational experience, thinking, okay, I'm going to come in, I'm going to make $1,500 a day, I'm going to make $100,000 in my first 3 months, and I'm going to quit my job, and then I'm going to turn that 100,000 into $1 million, and then I'm going to turn that million into 10 million, and then I'm just going to keep going, and I'm never going to stop, and I'm going to be so rich, and I'm going to have the best life ever. Boom, you're already. If you ever tell me something like that, you're going to fail. Okay, and I'm about 95% sure that you're going to fail, and this is because people go in with the mindset of that day trader lifestyle, right, where they take huge positions but they don't manage them, and they have false expectations. So here's what you need to stop doing, right? We're taught from the beginning to set a take profit, right? Have an objection, or not have it a not an objection, what's the an objective, a price objective, have a kind of a milestone or whatever, right? And here, let me give you an example, right? So if you, let's say some of you decide you want to trade the 15-minute chart, right? And let's say for some reason, I'm not doing any analysis, this is just purely an example. You want to go long here, you buy this pullback, you get in here, and you get out up here, okay? So you got in Euro USD at 122 and you got out at 122.50. So you snagged 50 pips, okay, which is totally fine. That's totally okay with me. But here's what the problem is, right? You are totally limiting your potential gain by taking your entire position off the table at 50 pips, right? Because there's no way of telling that this move is going to stop right here, okay? Sure, there was old resistance, but this could possibly break. What you could do, okay, is target this resistance area and say that's a target. I want to see what price does when it gets there and how it reacts. And if psychology in the markets, if you read a book on psychology in the markets, or if you guys, if you want to see it, I can do a video. I can do a couple video lessons on it, a video lesson series on it, whatever it may be. And you want to see how price reacts at that level. You want to see what the sentiment is in the market, what the general population of the market, or if you can spot big bank moves. But the ultimate point that I'm trying to make here is that you are limiting your potential by only setting a take profit at 50 pips. Okay, this is exactly why I break stuff down on the higher time frame. Okay, because guess what I could have done on these when I was talking about Euro USD rallies from here, and look at where it is now, just so you know. And I put my risk into USD CAD, not Euro USD, which I can explain here in a second. Actually, I'm going to go to USD CAD because it's a live position that I have open. Okay, so what do you do? What do I see here? I see that price, let's go from right here because this is where I was getting interested. I see that price was in a channel from October 27th all the way over to December 28th. Okay, that's what I saw, right? Price was in a channel sideways, no trend. And then I see that we break down right here. Okay, we break out, and so what do? I see, okay, at this level, first of all, we're consolidating. Buyers didn't have the strength that they had down here when we broke out of these highs, okay, and actually ended up making a higher high instead of a lower high like we did here, okay, like we attempted to here, but buyers came through and successfully formed that higher high. Okay, I see, okay, buyers are now getting weaker. We have strong selling power right here. Okay, once again, buyers are having a hard time beating the bears, and the bears were having a hard time beating the bulls. But we ended up seeing bears come through. We saw nice candles, nice consistent daily ranges, which shows that banks are in control and institutions have their money in. Okay, because it's not just day traders that are going to be doing this, kind of producing this kind of move here. So I see that we break, and I see, okay, bears have won this battle as of right now. Okay, so what do? Okay, I wait. I don't want to get in here because it could potentially be the bottom. I want to wait till I can get a pullback. So I look up at this potential area of value right here up in the EMAs, and that's where I begin to look for a short position. Now, what do I look for? Okay, we're up in this area. Now we're on the lower time frame, doing entry, and we're specifically looking for an entry. And here's where here's what I looked for. Okay. One, look, on this pullback, here's our bullish market structure, high, 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 low, 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 low. And when then we get up here, we ended up breaking the low here, bearish market structure, bearish Bollinger Bands. Now, what do I do here? Okay, I do not get egotistical and say that price will go down. I say with what I use to analyze my positions and my entries, we have crossed over EMAs, right here. This is actually, I ended up getting in right around 125.08, okay, right in here. This is where I entered my short. Okay, we have the 9 below the 20. We have the 20 coiling down. We have Bollinger Bands expanding to the downside over here where price was, which is good. That's a gateway opening for price to move. Okay, and then we had an upper band expanding, showing that good volatility was coming into the market. Okay, so I had everything on my side, and we just made lower lows and broke a channel on the daily time frame. Okay, so now I have everything on my side, and I'm reacting to price. I'm saying, okay, bears look to be in control. I set my stops right up in this area, right around here, and I see what happens. Okay, my risk is 2% on this trade. Was 2%, now it's at break even. And price rode. I never once said, okay, I'm going to take profit here. I'm going to take profit here. I never had an objective because you're limiting yourself to possibly writing out what could have been a huge potential gain and make your year. Okay? So here's what I did. Because people get scared, and people are easily scared out of the market, I simply waited for price to get down here. And it wasn't till after this move that I set my stops to break even. I waited till after rates to set my stops to break even. That sounds stupid, but I psychologically was able to do it. I'm not telling you to do that. I'm telling you, me psychologically, I was able to handle that, okay? And if I got stopped out, big deal, move on to the next trade. My risk was fine. All right? You trade to trade well, and the money will follow. That is what every good trading book will tell you. Trade to trade well first, and the money will follow if you continually compound over your career. I can almost guarantee it, only because I can never fully guarantee something, but that if you trade well, catch good moves, let your winners ride, and cut your losses quickly, you can make millions and millions of dollars in this market. You can. Not all of you will. Most of you probably won't. But I'm confident that some of you here are digesting this advice that I'm giving you totally for free, and I want to help you. So, prices now, update, all right, I'm up now. I entered at 125.08, price down at this lowest area. Before the rates was at 124.04. I was up a little over 100 pips, and once again, I'm up about 100 pips still, but a lot of people, what would have happened as with the newbie mindset and the poor psychology that they've been taught, they would see, oh my God, there's support here. Oh my God, we're starting to form a channel here. Oh my God, oh my God. And they see price rallies, okay, and they get scared. And they get up here and they're like, oh my God, so much of my profits, I'm being taken away, I'm going to close, okay? That's immediately killing your longevity in the markets. What here shows you that price is rallying from this level? All I see is that price came up, didn't even get above a swing high right here that I'm looking at right here in terms of price. Didn't even get above it. Now, yes, it is smart to take into consideration the fact that we have short sellers have been stalled here. But every single time, look, buyers have tried. Nope, fail, 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 major fail, fail, fail. Okay, bears won every time. This shows that the bears are still here, and the bulls have yet to win this battle, if they ever will. Neither have really yet to win this battle. I want to see a break of 124, and I want to see it hold below 124. Okay, that's simply what I'm looking for. But as of right now, my stops are at break even. But the ultimate point of this video, right, is I'm not getting swayed by these intraday moves that are minuscule and are not important, right? Because on the daily time frame, look, if we break this low, this 124 area, and if we can hold below it, where can we go? We have unlimited potential. In fact, I could have scaled in on rates. I could have added more to my position because my risk was already at break even. I could have just added more to my position and averaged out my entry better and ended up making more profits. I was not at the charts at the time, and it was a quick move. I might not have, even if I was at the charts, I might not have gotten in because I would have been watching something else probably. But if we break this low, where could we go? We have unlimited potential down to hit here. I have a target here. Am I going to close here? I don't know. Depends on how price reacts. Okay. But as of right now, bears are in control, and it seems to stay that way. From what I'm seeing, it looks that we're going to stay that way. It's that simple because I'm looking at price. My psychology, my mental toughness is there that I can do it and be comfortable with it. Okay? So, none of these are doing this, but none of these moves here are instilling fear in me. I never once had fear. Okay, I never once had fear of, oh my God, now this position blows. No, I didn't. I didn't, because I knew the analysis was still there. I knew rates were coming out, and I knew it was going to be a major whiplash because most people were expecting some kind of move in the rates in Canada. Okay? So, stop thinking that day trading is where is the holy grail, okay? Maybe it ends up being the holy grail for you, and that's totally fine, but don't immediately go into the market thinking that you have to put your entry here, price is going to turn around here, I'm going to target here, price is probably going to stop there, and I'm going to close there. No, react to price. Don't predict price. You will lose every single time. It blows my mind how many times I used to predict price, and I was wrong. I was completely wrong, and I learned nothing valuable from it, except for the fact that I shouldn't do it. So stop doing this to your accounts. Stop blowing your accounts. Stop witnessing potential gains evaporate, and start to hold your winners so that you can have the ability to say, yeah, I shorted here and I got out here. Or I risked 2% on this trade, but I made a 30% return on this trade because I held it for so long, and the risk to reward and the risk management was so fucking good. Okay? Stop doing these things. Stop getting plagued by social media and these get-rich-quick schemes that end up never, ever working. There's always something that smells fishy in the inside, and there's always something that ends up smelling fishy eventually. So once again, guys, thank you guys for hopping on so much. I appreciate it. Take this lesson in deeply because it's a very important lesson. If you want to read more about it, I did a blog post a couple days ago. Not as in-depth as this video, and I didn't use a live position to explain it, but I'm sure there's something in that blog that could continue to add value to this. once again, thanks guys. If you haven't subscribed already, please subscribe. I'm going to be releasing videos all the time. Just turn on those notifications so that you can be hopping on. Most of these videos will be either analysis of after positions, so that we can break down lessons together, do an analysis at the beginning of the week, or just posting a lesson like this when I feel that there's something that I can teach you guys, because I want the journey to be together. I want us to learn together. So please, if you have any questions, leave a comment below, message us, DM us on Instagram, or hop into our free chat. Whatever, we are willing to help you. Once again, guys, thank you so much. Have a great night, and I'll speak to you tomorrow morning. Thanks, guys.